Welcome to the daily update, where I'll go over the action in the market for Thursday, October 2nd, and we'll see how things look for Friday, October 3rd. Okay, set another new all-time high, but there's just not much conviction. We've got the government shutdown. We're not getting economic reports. There's some other charts that I'll go through here that might give us an idea. But it's like, okay, instead of being comfortably numb, we are uncomfortably bullish in the market, but it's also not showing a lot of conviction right now. And we were looking pretty good after Wednesday. Things were all fired up, looking a lot stronger. We saw some conviction, but that really didn't carry through. Even though we were up, we closed off the high. We set the high right at the open. And it's like, okay, let's see what's actually going on inside of the market. So, right at the open, we had a higher open. It was just a little bit below R1 at 67.58, but that set the intraday high. Then we declined down below 6,700. That's becoming more of a critical level. It's more psychological, but it's also technical. A few weeks back, we got up to that level, and that was overhead resistance. Well, now we're above it. So it's like, okay, is this support? Kind of. At least we got back above it later in the day. And then we actually dipped down below the unchanged level and we found support at the daily pivot at 66.95, under that 6,700 level, and that set the intraday low. Then we just rose back above 6,700, the unchanged level. So we went positive. We didn't even get back up to 67.25, another round number, with late day selling causing prices to drift down to close slightly positive. So we were just up 0.06%, virtually unchanged on the day. Really not a lot of conviction. And we were below average with volume. So this is one of the days where we're seeing a pullback. It's like we're not getting any economic reports. There's variables out there. We're supposed to get the employment report on Friday. We're probably not going to get that. So what are we going to do in the meantime? But we are looking positive still, uncomfortably so. But it's like, okay, you have a lot of people that just don't trust that the market should be going up, which is probably why it's going up. And we are positive on all time frames, short, intermediate, and long term. Interest rates are coming back down. That's more market friendly. And then we've got the government shutdown. We've got all the weird things happening in the US. We've got all these geopolitical things going on. And the market's just kind of treading water a bit right now, but not really concerned about these things that it could really fixate on. Okay, so some comments. Again, for the second day now, we had the S&P, Dow, NASDAQ, and NASDAQ 100 setting new all-time highs. Not by much, but they went up. And so we set all-time highs after Wednesday. That means any up close, we set an all-time high after Thursday. And then Senate Majority Leader Thune said that it's unlikely that the Senate will have enough votes over the weekend to reopen the government. Now, there's just as many people celebrating this as are protesting this. It's like, okay, if these folks are not really essential, why do we even have them in the first place? And then the other side says, well, but we have to take care of the people. Then the other side says, well, it's not the government's job to take care of the people. We're supposed to take care of ourselves. And it's like, well, but people don't take care of themselves, so we need the government to come in and do it. And there's all this back and forth with sombreros and mariachi music and so forth. So the shutdown has delayed the release of economic data, but it does add to the uncertainty. Now, there are some other reports that we can kind of get a pretty good idea of what's happening. And then semis had a good day. They're doing pretty well, and that's a growth area, and they're setting all-time highs. So that is encouraging. And then Tesla, they had their earnings report come out, and it was like really good. But then when looking forward, they're like, okay, this tax credit that people have been getting, that's going to expire. And so the stock sold off on that because maybe there won't be as much demand for Teslas now. And we're still showing positive conviction, but it's not really building. It's pulling back just a little bit now with the Williams percent R, the CCI charts, and the stochastics. We're still above 70 with the RSI 9 for right now. And then in the intermediate term, the Sean trend meter is looking extreme, the Chaikin oscillator, and then we're still far away from the 50 period moving average as measured by the boom indicator. If you watched yesterday's video, we had the boom 20 on here. The even though we didn't close up all that much, it gave a little bit of a chance for the 20 period moving average to catch up. So we're not too far away from that now. No change to the scenario. Now, why is the market going up though? It's like, okay, we're overvalued. I showed chart after chart after chart that shows that. And it's like, okay, and should the market keep going up the way it is? And it has to do with really two things: earnings, and we're not going to, or at least the market is not anticipating that we're going to go into a recession. That's what decimates stock prices because that brings earnings down and that just sends the country into a difficult period of time economically. And the market is, and I'll go over this in the weekend videos as well, they're not concerned about us going into a recession, and earnings are still looking pretty solid. And so that justifies prices continuing to go up. Now, they're still pretty sure that the Fed is going to cut rates at the end of October. The one variable now, at least for 2025, is are they going to cut them for December? The market likes to think that it will do that, but once the government gets unshut down again, then we'll see what the reports have to say. Now, I remember this 95, 96, something like when the government shut down, and this actually lasted for a couple of weeks, and the government reports were delayed. The stock market was all confused and everything. And we just saw this lethargic period of time with prices just kind of chopping around. But then when the reports came out, it's like, well, but that's an old report now. So it's like it would apply if we got the report right now, but if we get it a week or 2 weeks or a month from now, it's like, okay, this is old news. We can't really find this all that useful. So the longer this government shutdown lasts, the more irrelevant these economic reports will become because they will be delayed. And then when the reports do come out, it's like, okay, this doesn't really apply to what's happening right now. So the dollar was down, interest rates were down. This did help stocks to end up closing ever so slightly positive. We're at 409, so we're trying to head back down to that 4% level again with the 10-year yield where we were at 4.11%. We're still neutral with sentiment. Again, another update, but we're ticking down. We were at 53, now then we were at 52, now we're at 51. You've got a lot of people that are not trusting this rally, which, as I said earlier, is probably why we're going up. And as far as our trend, now we are strengthening. We're seeing the ADX start to go above the moving average, both in the short and intermediate term. So that's a strengthening trend. It's positive. The green line's above the red line, and we are above 20. The bias with the ever so slight update is positive, and I'm still keeping it mixed to positive, mainly because I'm just, when you look at all these charts together, you're not seeing an awful lot of conviction. Okay, so no reports that I can share with you there. So we'll go to these next charts. Some of these might be helpful. This is the Fed funds rate versus CPI. You can see how they they go hand in hand with each other, and we've been coming down with both now. So that's pretty much what we usually see here. And then more clues that the fourth quarter could be strong. So what are the returns after the top 15 September returns ever? So going back to 1950. All right. So now they're not all positive, but a very high success rate. Well, yeah, not really. It's 57.1. That's a little bit over 50%. It's when you look at the whole quarter together. That's when we kick a little bit more into gear here. We're actually under the median here. When you just look at October, it's when you stretch it out a bit. That's when it tends to perform better. And that's when the rate of return ends up being better as well. And then this, we're seeing ISM manufacturing, which is a report that we received, and then we compare that with the purple line. You can see they tend to move in the same direction, and that's what's happening right now. Then approximate lifespan of historical bubbles from run to peak. Now, there's debate. Are we in a bubble right now? Okay, if you're a perma bear, yeah, every day we go up. You think we're in a bubble. If you're a perma bull, it's like, no, this is just getting started. We're switching around the economy. It's more technologically based now. It's a lot of AI. We've got a lot of new inventions, a lot of new medicines and advances that are happening. So no, it's not necessarily a bubble as long as the earnings are there. But these are different things that have happened. The Roaring 20s. I remember when I was very young, I played on a T-ball team called the Roaring 80s because that's when we all graduated. Even though we were 7 years old at the time, we ended up graduating in the 1980s. But this was a bubble. And if you've done any kind of historical research on the stock market, I mean, you could buy margin was like 10%, which means you could borrow 90%. And so when everything started to really go over the cliff, it went over fast. This is the one that some of you might remember, the dot-com bubble. There were no earnings behind these companies. This was more, we had the Japanese market really doing well. They were buying up anything and everything at the top price here in the US. And then that led to a currency crunch in about 1990. Well, that would eventually work into the 1990s, mid to late 90s. But then it was just this year that the Japanese Nikkei was getting back to the 1989 highs. So it's taken them that long for that to happen. Some of these are a lot longer. If you read some books out there on manias, it talks about the Mississippi bubble, the tulip mania, and that was crazy in Ireland, the UK railroad mania, South Sea bubble, this fictitious company that existed in America. And if you belong to the program that I have, I'm developing some breakout videos that talk about this. There are some good books out there that really go through what was happening. But the takeaway from this is there's nothing new under the sun. People were getting swindled back in the 1700s. Even before that, if you look at other things that have happened throughout the course of time, this was the 1600s here, back with the tulip mania. But then we had the dot-com bubble, then we had the real estate bubble in 2000 that topped out in about 2006. And then you could say gold was a bit in a bubble. Everybody was jumping into gold about 2012, then it went down. And so then you had a lot of people have really gotten hurt by Bitcoin over the last few years. It became all the craze. It was going up. People got in at the top. It really went down after that. They got wiped out, and then it started to go back up. So a bunch of people jumped in. Then it went down again. Now it seems to be hanging on and doing much better. But to ride this roller coaster was quite difficult to do. Okay, then U.S. government shutdowns against the S&P 500, and just look at these orange lines here. There are sometimes we were declining. Of course, the 70s, that was a difficult time anyway. But you see, eventually we would go back up anyway. It's not like the end of the world here. All right, and then valuations, okay, highest since whenever. And this just shows that we're overvalued, something that we've known now for quite some time. Earnings sentiment. We are coming down here a little bit as we're finishing out, looking forward and going into the fall months here. And this is coming down, but still the strongest when you compare it to other countries. And that's just earnings sentiment. That's how folks are feeling about earnings. And then construction jobs. Okay, as of August, the ratio of residential construction payrolls to housing permits stands at 2.5. All right, highest level since whenever. This ratio is about 10% higher than it was in 2024. There's no need to hold on to workers that are not doing anything. All right, so we're seeing this here. And employment data. The U.S. economy added 60,000 jobs in September, according to Revelio Public Labor Statistics. Good old RPLS. Their data is highly correlated with what we get, the Bureau of Labor and Statistics. And so they have a 0.74 degree of correlation there. And independent of the ADP, that's the report that we got yesterday. And so a regression model using both suggests that we would have reported 38,000 jobs. All right, so that's what they're coming up with here. And then household liquidity. Households continue to hold a lot of liquidity relative to debt for all age groups. Another way to see the same thing, okay, liquidity as a percent of net worth. How they have a lot of cash on hand. That's really the takeaway here, which is good. Something comes up, people have the money to actually do that. They don't have to sell assets to generate cash. And and I think they came out with the latest chart of the AAII survey. Not really much of an improvement over what we've seen before here. We're still not seeing all that big of a change, but this is showing the asset allocation. Most are in stocks. That's what most people do. And we're actually seeing a little bit of a drop down here in cash as bonds have been going up and they had been performing better as of late until we went through that last phase where bonds were declining. And then hyperscaler capex. Okay, this is just showing all these companies, they're going to be putting capital into advancing technology from, and mainly it's in the main AI companies here. So you have Alphabet, Amazon, Meta, Microsoft, Oracle. And when these are the huge companies, these are the mega caps. And so when they're dumping a lot of their own money into this and it's projected to look better, that's why the market is doing better. All right, here's the chart. So we gapped a little bit higher, not really much of a gap, but we couldn't even make it up to R1. But this set the intraday high. Then we drifted down below the unchanged level. We did hold at the daily pivot, and then we came up off of that, went back positive, and then drifted down going into the close. And we're up actually a little bit here, about a third of a percent, I believe, anywhere from a quarter to a third of a percent in the initial overnight session. But as I'm recording this, Europe hasn't even opened yet. But we saw the futures higher, and then we saw that coming down in the cash session, but then coming back, but closing well off of the highs. This doesn't show an awful lot of conviction in this chart. And we're doing okay here, but not great. Both, for the most part, the blue line and the red line are going up in the bigger picture, but not a big change there. This is where we're seeing a bit of a lag, the intraday growth to value for the S&P. We're back above the moving averages, but we're not seeing any upward conviction right now. So we were up where value ended up actually being down a little bit for the large caps. They were about even with the mid caps and a little bit less here, but about even with the small caps. So a little bit of a bounce up here with the small cap growth to value, but not even back up to the moving averages. We could be getting ready to see a death cross with this ratio. This has been looking better, even though the mid cap index hasn't been doing all that well. The growth to value ratio here breaking out, not quite back to the previous all-time high. And we're still under the 50-day moving average with S&P growth to value. We want this to get back above both moving averages, go up, resume the uptrend. That would be more positive. And we're just not seeing much in the way of improvement, but we're not seeing a really big breakdown either. And here, a little bit of a bounce back up with this growth to value ratio. We're getting back near the upper end of the rainbow, and we're still holding up okay. This is probably the best looking discretionary to Staples growth to value type ratio that we have here. This is holding up fairly well. And this is an inverse. This is showing you how value is underperforming tech, which is the biggest part of the growth sector. So that's still hanging in there for right now, and we're looking more positive that way. So we're starting to cross above the line with the ADX. That shows a strengthening trend. We're above 20, so it is a trend, and we're positive with the green line above the red line. Same thing here. We're starting to cross above the moving average in the intermediate term. We're positive, and we're above 20. And we did drop to below average with volume here. So, and if we don't get an employment report during Friday's session, you might have below average volume there as well. And now looking at the gamma exposure, this is, we're starting to look out a little bit here. Notice that 6,800 is starting to come into play, but it hasn't come all the way up to the blue line yet. That's really what I watch for. Now, we had been watching 6,700. We're seeing that dropping down as we're above 6,700. Now we're starting to see, and these are like 5 point increments here, because when I first started trading options, they were all 5 point spread strike prices. And so now with the S&P, we have 1 point and sometimes even half a point. But this seems to be kind of the big area right now, 67.25. We're 10 points below that now. So if we do go up on Friday, we'll be watching this as an area of potential resistance. And then we're not quite up to the blue line here, but if we go up to 67.50, that could be another area of resistance according to the gamma exposure chart. So not seeing much of a change here with the VIX, either with the line chart or bar chart, not seeing the negative seasonality. And we are dropping down. We're below the moving averages with the volatility of the VIX. This is still causing a concern. We're still going up with the VIX to S&P correlation. It hasn't topped out yet. We're still getting higher and higher. And if you go back and look where I have the red lines on here, that typically, not always, but typically means that we had some kind of a downward move when this finally tops out and starts to come down. Still seeing the moving average here of the stock to bond volatility ratio after we had been declining. Now it's starting to go back up and it's been going back up. I usually don't show this chart, but lately I have been. This is the individual investor, still slightly bullish right now, but not much of a change on the reading from what we saw a week ago. And we declined with this fair gauge. We also declined a little bit here with this other fair gauge. So a little bit of fear coming out of the market. And we're really dropping off with the daily equity put call ratio. So now we're going down again with the 5-day chart. That's taken as more positive, but we're already extreme since we're below this red line. But when you look at a longer version of this chart, we still could go down more than where we're at. This is around 2020, 2021. We were getting very low readings with this before we finally went up, and that ended up being a decline in prices. And this is getting to a pretty extreme reading here with the 10-day put call ratio. This is pretty low. We were down here in 2023. That marked that we were near a top at that point, and then we saw a pretty significant decline after that. So is this suggesting that maybe we are ripening ourselves for a decline? But we're still going up with the risk on to risk off ratio. We haven't gone back to the previous high, but this is continuing to go up. That's positive. We're also going back up, not quite surpassing the previous high with the high beta to low beta ratio. But look here, we're getting a really high reading still with the volatility risk premium that's not getting picked up with the VIX and our other sentiment gauges. We are seeing fear coming into the market with the S&P to VIX correlation, and we're seeing fear coming in here. So just be aware. All right, advanced decline line pretty much flat, ticking up just a little bit based on price. We are still going up based on volume. We're still seeing volume outperforming price, and that is positive. And not really much of a move, but we're positive with the short and intermediate term advanced decline ratio. We came down, but we're still above zero with the advanced decline oscillator. And a drop off here. Now, with the move higher that we saw, at least at the open, you would think maybe there were some new highs that were generated. That's probably what it was that generated these new highs, but it's not breaking out where this had been looking more strong. But we're still going up with the 5-day chart and the 10-day chart. Now, our smart money indicators getting a little bit of a mixed picture. Still looking positive with accumulation distribution, possibly getting a little far away from the moving average. And we're rolling over a little bit here where we were positive going above the moving average with the boom indicator. And we're declining. The chicken money flow is actually now going down. And we're extreme with the chicken oscillator. So we have one already turning negative, one looking positive, possibly overextended, and this one is also looking overextended. And look at other times when we got above this green line. Didn't mean a reversal, but it could mean that we're going to slow down even more. I can't imagine going slower than we already are, but it could mean that we're coming together for a pullback. But we've been seeing setups like this throughout the summer months and through September as well. But then we have a good day and it kind of blows all those setups right out of the water. And we're flat here with the green line with the vortex and flat with the red line, but we are positive with the green line above the red line. This is more positive though. The accumulation, excuse me, the cumulative advanced decline line for the S&P based on volume, setting a new high. Meandering around, not doing much here based on price. And we're still above the moving average with the S&P advanced decline line, still slightly below with the NYSE common stock, improving but below the moving average with the mid caps and small caps. Now we break this out looking at the NYSE common stock, just kind of blah blah all over based on price. We are setting highs here based on volume. A little bit of a decline, but still above 50 with those stocks above their 20 period moving averages. Bit of a decline here with the 50 period moving average study. 100 went up a little bit, and the 200 actually declined a little bit, but these are still holding up for the most part. We are above this overhead resistance. This was a pivot point for September. Now that we're into October, we're trying to break back above that. You look at the longer term pattern here, it still has some integrity with higher highs and higher lows for the most part. We are in an uptrend, but we drop below the moving average when we look at volume. A little bit of a tick up, but not a change with the 20, 50, and we were down just a little bit with the 200 period moving average study. We're still trying to get above the midpoint with the Stochh RSI. Now, the ones that are giving us some positive conviction, the Williams percent are, that's up in this extreme area, but it did decline. And we're looking a little extreme here with the CCI 20, excuse me, 14 and 20. Not a lot of conviction here, but they are up in this area, showing that positive conviction could be developing. Rolling over just a little bit, but still extreme with the short-term stochastic looking more solid here, but starting to get close to being toppy here with the intermediate short-term. And we're finally turning back to positive with the long short-term stochastic, but we're extreme since we're above this green line as well. And we declined, but we're still above the midpoint with the force index. The short-term trend still looking pretty good here. Both lines are going up, and we're just at the border between the +2 and +3 channel for the standard deviations chart. Now we switch over to the intermediate term. A little bit of a decline, but still above zero with the balance of power. Positive with the go, no-go system, darker blue bars. Day 107 now of the Landry Light uptrend, and day 101 with the proper order uptrend. But we're continuing to drop off here with the TTM squeeze. Darker blue, declining now. So this is actually negative. And we're just off of the highest high value here with this chart and just skimming along this hydroplaning or whatever you want to say, just barely above zero with the ease of movement. A little bit of an improvement, but not extreme with the Arun indicator. There's still more buyers than sellers. Buyers are getting pretty extreme here, where the sellers are actually dropping off. And a little bit of a tick up. We're slightly above zero with the S&P McClellan oscillator, so we're still barely going up based on price, seeing more conviction based on volume. We've been seeing that now for about a week, and that could end up being positive. But we eventually have to see this follow through with price, and we're just not really seeing that with a lot of conviction. Now you look at the NYSE McClellan oscillator, tick down a little bit and below zero, so that's still negative. When that's below zero, we're declining with the summation index based on price and declining, but not quite as fast based on volume for the summation index for the NYSE. We're still going up with the swollen trading oscillator based on price and volume. That's positive. And we're crossing above the moving average based on price. We've been looking a little bit better here based on volume. We're pretty much flatline, trying to go up slightly here with the PMO. And a little bit of a tick up with the PMOs that are rising. The buy signal still under 50, but improving and leveling off and trying to go back up with the PMOs that are above zero. Intermediate term trend still looking pretty positive here, above all the plotted moving averages. And we're no longer too far away. I just put this at 100, and we're at 97 and a half roughly now. So we're not considered to be too far away from the 20 period moving average, but we're still above 200, which is the level I use here. We're looking extreme when we see how far away are we from the 50 period moving average. And we're still at that above that 10% level. We're 11.41% above the 200-day simple moving average. And positive with the Elder's Impulse system for the S&P, positive for the second day now when we look at the parabolic SAR, and drifting down slightly negative here with our short-term oscillator, and trying to turn back up and go slightly above the moving average with the MACD. So again, we're getting a mixed picture in the short term. The slope oscillator is declining while the TSI is going up, and those are short-term oscillators. We're still pretty much flatline with kind of a positive bias here with the three intermediate term oscillators. And we're still basically going up, but starting to flatline with the tricks, and we're still looking a little more positive with the KST. The bottom two are the long-term oscillators. And we're negative now with the copy curve. We've dropped below the red line. We're extreme up in this darker green area with the Sean trend meter. We are still positive with the money flow and ultimate oscillator and on balance volume. And we're still a little bit extreme here with the RSI 9. We're barely above 70. We're barely below 70 with the intermediate term RSI based on 14 periods. And not showing a lot of conviction, but we are positive with the bullish percent index for the S&P. We're going up and we're above the moving average. And we're just not showing a lot of movement here with the NYSE bullish percent index. And we're seeing a little bit of a tick up here with the NASDAQ 100 bullish percent index. Okay, and this is still looking good. If we were to close after Thursday, we would be up over 1% on the week. The weekly bars are still looking pretty good, and we're continuing to set a series of higher highs and higher lows. And we're still at the upper end of this trend channel, breaking out of the top of it here with the going back to 2009. So, from a trend perspective, though, we're still looking pretty good. The Heiken Ashi is positive, the Kagi chart is positive, the Renko chart is positive, and the three line break is positive. And long term, still holding up okay with the 150 and 200 period moving averages. Positive on all time frames across the different indexes. We're negative now in the short term with commodities. We're still negative across all time frames with the dollar. And so we had materials, which have been having some problems lately. That was the best performing sector. Then we had tech, but it was up just over 0.5%. And then industrials, where we had communication being down as well here. And that's another growth area. And then energy got hit. It's been kind of shooting up lately, and now it seems to be pulling back these days. So Canada set a new all-time high, but didn't close that way. They ended up closing below 30,000. The tech sector, which just had a BPI cross below 70, is now having a cross back above 70. We are setting all-time highs with the S&P, NASDAQ, and NASDAQ 100. Energy sector, which just had a bullish MACD crossover, is now having a bearish one. And a couple of days ago, it had a bullish one. And then the NASDAQ getting above 22.8, and then industrials are setting a 4-year high. So a lot of Christmas look here, red and green here. Nvidia up, Microsoft down, Apple up slightly, both Google stocks up a little bit here. Tesla got hit pretty hard after they came out with their earnings, but Amazon was up slightly. The Dow finally trying to break above this pivot point, which was acting as overhead resistance in September. Now we're just a little bit above that and setting a new all-time high on a closing basis. Positive with the diamonds and still okay here, but see 0.39%, not a lot of conviction there, but setting a new all-time high with the NASDAQ and still positive with the Elders Impulse system and setting a new high here with the NASDAQ 100 and positive with the Elders Impulse system. Just kind of hanging out right around its moving average here with the momentum for the NASDAQ 100. Still looking good longer term, above this trend line going back to 2009 on the weekly chart. We are setting a new all-time high here with the equal weight S&P and the QQQ equal weight. That's positive. And this is spread out, so it's showing more participation. Then small caps up a little bit here, but they've been pretty much range bound after looking pretty good there for a while. Looking a little better here with the Russell 2000 small caps. They were up. They actually did a little bit better than the rest of the market. And we're positive with the small caps with the Elders Impulse system. Kind of just moseying along sideways here, barely up with the mid caps, but still positive with the Elders Impulse system. The Wilshire broad market measure did set an all-time high, as did the total U.S. stock ETF. The financial sector, and I have a couple of new charts that might give us some insight here that I'll show in just a moment. Still down, not really doing all that much, but hanging around above its 50-day moving average. But it's positive when you look at it by itself. This is the concern. We are underperforming the S&P. So then I found some different charts here. This is ARK. Now, some of you might know ARK, Kathy Wood. She's like the rock star until she wasn't. She didn't have a good hit back in 2022 and has been fighting to recover in 2023, 2024, and 2025. But there's another ETF called ARK FinTech. And this is more of a modern approach to financials using technology. And so there's financial sectors included in this, communication, and the tech sector is involved as well. And communicate, did I say communication? So it's kind of a combination where I usually like to look at just sector studies themselves. But this is doing pretty good. It's ARKF. All right. And so this is holding up quite well. And then we do a ratio of ARKF to the S&P and not really outperforming, but it has been doing quite well in 2025. This is giving us a little more hope with newer technology that's being used in the financial sector. FANG index just kind of moseying along sideways right now. It was up, but not setting an all-time high. So Apple was up 0.2%. We had Amazon still above its 200-day moving average, was up slightly, right around the 50-day moving average with Microsoft. And we were up 0.33% with Google, up 1.35% with Meta, but still below its 50-day moving average. And then Tesla, buy the rumor, sell the news. That's kind of what was happening here. As there was anticipation that Tesla would have good earnings, we saw the stock really going up. It gave back over 5% on Thursday. And Nvidia, again, setting a new all-time high here. So looking pretty solid that way. And then Netflix, what are they doing? Showing sucky movies these days? I don't know. I've watched a few good ones here, but we're drifting down below the 50-day moving average, and it declined. And then semiconductors, though, are looking good, up 1.33%. The SMH semiconductor ETF up 1.36%, setting a new all-time high. Looking pretty solid here with the same ETF, the SMH semiconductors. And the semiconductor to Dow ratio is going up above this blue line. So that's showing some growth versus value strength on the growth side. And we're going back up here with the semi to tech ratio, but we want to see more follow through with this and see this really start to outperform. We want tech to do well, but we want semis to do even better. And we're still going down with the staples to tech ratio. That's positive. That means staples are underperforming. We're seeing a real sharp up move here with the short-term correlation between US and world stocks leveling off, trying to go back up here with the longer-term correlation, dropping down into the low 60s now with oil, and we are in a downtrend with the US dollar index. And we're now back to going down with the 10-year yield, which has probably been helping stocks. We're going up with the 10-year based on price. And then we look at the growth to value ratios. Saw a little bit of strength here with the Qs to S&P. Not much of a change here. Tesla took a lot of wind out of this. We're dropping below the moving average with discretionary to the S&P, and we're still above an advancing moving average when we compare large cap growth to value. A little bit above a declining moving average with the large caps. Mid caps looking a little stronger above an advancing moving average. And we finally crossed above the moving average with the small cap growth to value ratio, but the moving average is still declining. And this is positive too. The staples to S&P ratio continues to decline. That means the S&P is outperforming staples, and that's positive. So what's our outlook? Okay, we're still positive. We're above that longer term support. And there's a number of different areas. It's the 20 period moving average. It's the 6,700 level. It's the 6468 level on the weekly pivot point chart. And we're seeing conviction building. It didn't really do much on Thursday, but it's not really going away either. And we're supposed to get the employment situation report and ISM services. So that's why there's question marks there, because we may not get those. And then all the crazy stuff going on here that doesn't seem to have much of an impact on the markets. And here is the finishing of the economic calendar for the week. This is what we're supposed to be getting here, but we may not be getting this. Seasonally, though, we are positive for October 3rd. Across the board here, it looks pretty good for the Dow, S&P, and NASDAQ. And then over the last 74 years, we've been up 59% of the time. With in the month of October, we've been down 41% of the time. And we do see some positive seasonality here that lasts for a couple of more sessions when we're looking at just post-election years for the S&P. That's the green dash line. We are in the third best performing half a month right now. And this also bodes well looking off into the end of 2025. We've been outperforming these different measures that we've been seeing up to this point. And we also have positive statistics going back to 1950 for the S&P, as well as the other indexes that we follow here. And this shows October tending to be more positive. And then once we get into next week, I'll start blocking these out because these are companies that are going into blackout because they're going to get ready to report their earnings. So we still have the McClellan Oscillator and Summation Index for the NYSE. That is negative. And I put the momentum oscillators over on the negative side. We're getting a mixed picture at best. We're not really going down with a lot of conviction, but we are drifting down more negative. Then on the positive side, where we're getting a mixed picture here, accumulation distribution. That one's looking okay, but maybe overextended. Where we are negative now with the Chaikin money flow, and we're looking extreme, but extreme positive with the Chaikin oscillator. And then the growth to value ratios, discretionary to staples, bigger picture looking good, shorter term, not so much. And we've been seeing that since the beginning of August. We are still positive with the McClellan oscillator and summation index for the S&P. Swollen trading oscillator, the bullish percent indexes across the different indexes are positive. Ease of movement, money flow, ultimate oscillator, vortex, positive. and we're just barely positive. We're right on top of the moving average with the momentum for the NASDAQ 100. The financial sector by itself, but as I've been saying for months now, underperforming the S&P. And then the longer term special K, that's a very long term oscillator. Both on the daily side and weekly side are positive, and I'll be going over those in the weekend videos. All right, and here are the pivot points for Friday's session. Also, we did get a little bit above this. This is a daily chart. Now, these pivot points last for the whole month, and I was pointing this out as possible overhead resistance. Well, we got above that, but we're right just about on it right now. So even though we're above it, we haven't actually cleared it by very much at this point. So our conclusion, positive and above support, whatever support you want to look at. In the short term, it's the 20 period moving averages. Intermediate term, we're seeing some weakening, but also some improvements as well, and just not a lot of conviction. We're still positive in the long term, but we're now over 11% above the 200-day simple moving average. That's when we get a little bit concerned. Thank you. I hope you found this helpful. Have a really good day. I will talk to you in the next video.